Welcome to another episode of Simply Finance. Thank you for listening today. This is episode 43. It's Wednesday, May 27th, 2020, and I'm going to jump right in. So the markets today, I'm recording this during lunch. So it's about halfway through the trading day, and the markets are kind of flat today. A lot of mixed information out there. Nothing is popped too crazy today from the news that I've been following. The Dow is up 1%. The S&P is up 0.4. The NASDAQ is barely down, down 0.3%. And the Shane Index is up 1.69, which has been the Shane Index has been cruising this week. And for you guys, if you're just listening to this for the first time, I might have some new listeners listening to this one first. The Shane Index is just the performance of the index that I have put together myself coming out of the COVID-19 pandemic that you guys can all follow along with. It's basically just a gut check for me to see how the guidance that I've been given is helping, or really how it's performing or not performing. What's happening today is two stocks again, the airlines, American and United. And I will be evolving this. Today's episode is going to allude to this a lot, but currently, when I started this Shane Index fund for you guys to follow along, it was a really simple 5-stock program, and USO actually did a reverse stock split. So I only had like a partial share because of this small amount of money that I had invested. If you haven't listened to that episode, I would suggest going back to that. I will link that episode in the show notes. I don't know off the top of my head which number that was where we talked about that. But so USO is gone. I got liquidated funds for the partial share I owned. So now it's just American, United, Amazon, and Starbucks in the Shane Index. And honestly, that's not really a good way to diversify. With only 4 stocks and 2 of them being airlines, I need to evolve that quite a bit. So a bunch coming. I'm going to have some big moves in the coming week or so. I'm probably going to spend the next couple days and then the weekend really mapping out my investment strategy a little further. So today what I want to do is really just talk through that, give you guys an updated sense of where my head's at now that we're about to head into the month of June. It's crazy to think that we've already made it through another month and really 2 full months of the coronavirus pandemic. There's been a ton of lessons learned. If you've been following along with this podcast, I've talked about a ton of them, good and bad, decisions that I made with investing, and I've been trying to share this with all of you. I think you can get a lot out of that and hopefully not make some of the mistakes that I've made. But exciting to say the least. That Shane Index, even with the USO being taken out, since we did this, it's up 7%. So good. It's actually trailing a little bit behind most of the market indexes. So that's kind of what I'm basing it off of. If any of you are new to this, what I usually like to say is I would like my Shane Index to know that I'm, doing successful with this investment strategy. My goal is to always be outpacing the 3 big market indexes that I talk about: the S&P, the Dow, and the NASDAQ. So if I'm outpacing where their returns are, so if they're up 5% and I'm up 6%, that means I'm doing better than the market average. And that's always what I'm benchmarking against. So today, what are we talking about? I alluded to the fact that I really want to talk through kind of like a strategy refresh is what I would call it. My thoughts as we head into June and where my head sits with what I believe you guys should be thinking about as far as in your investment strategy, whether that's changing, pivoting anything, and what that really means for all of you. So really, I'm going to take a step back here. So what I've been looking at, and what's become very apparent over the last 2 months is this COVID-19 pandemic is going to last a lot longer than any of us could have ever thought. What does that mean for investing? Well, we obviously and it doesn't matter if it's now or any time in the past or future, none of us know what's going to happen in the market. So to say you can time the market, which is one of the worst things you can try to do, is obviously not going to work in this scenario either. And even short-term gains, I would argue, are going to be difficult, and you really are going to get into the sphere of gambling, as I say sometimes. If you think you're going to be able to make some bets and have some short-term gains in these conditions, just because the news is always going to move the market, but these days the news seems to be even more pivotal and central in the decision-making of investors. So there's a few things I wrote down that I kind of just wanted to explain to you guys. I'm hearing this a lot, and I think it's a great way to think about your own investment strategies, and it's things that I'm doing. So obviously the name of this podcast is SimpliFinance. I'm trying to break things down and simplify it, excuse me. And this is no different. So when I'm thinking of investment strategies going forward, there's a few key things that I'm trying to do now. I used to think that, if you're getting into a company who has seems to have a strong growth horizon, no matter what, that you could, put some money in and potentially if you're going to hold on to it for a long enough time, you could, really sit on it and wait for the returns to take place. In this new environment, I'm starting to think through companies that, number one, they're not going to stop business. Business isn't going to come to a halt. Business isn't going to be dampened enough that it's going to hurt. It's not going to hurt the stock price, no matter how long this pandemic lasts. I think having the understanding that this will probably always be a longer horizon than any of us could have thought is an important one to keep in the back of your head. So really, thinking about companies that no matter if this lasts really like until we're back up and running full throttle, whether that's 3 months of the rest of the summer, whether that's 6 months, whether a second round of COVID hits in the fall, like we've been talking and hearing about, and this goes on for another year. Okay, we really want to focus on companies that are still doing well in this time frame. And just to name a few, I mean, Amazon comes to mind, and I talk about them till I'm blue in the face, but it is true that they are benefiting from the COVID-19 impact more than probably almost any company out there that's public right now. So companies like that, where if this goes on for a long time, they're not going to be it's not going to be affecting their stock price. That's an important one to do. The next one is really getting even simpler. So during this time frame, we're all spending more time with our family. If you're married, with your wife or your husband, or if you have kids, maybe even you're talking to family more now than you used to, just because we're all stuck at home and, people are doing more of that. So what I've tried to do, and something that I think is a smart way to think about it, is to, talk to your significant other, talk to your kids, look at the things that they're using every day. For me, things that popped out right away, this one I haven't fully evaluated yet, but like my wife loves shopping at TJ Maxx, Home Goods, those types of places. Now, do I think in this new environment, are those places going to have a long road to recovery? Definitely. Yeah. I mean, if they're later along, depending state by state on when they're allowed to open, that's going to have a huge impact. But those are the types of things that I think a lot of people are looking forward to going back and having available to them when this is all over, when this is all said and done. So that's a big one. When I look at, me and my wife, when we sit in the evening and we're watching a show or just talking at dinner, it's like, what are we always looking at? My wife recently has become a big fan of TikTok. So TikTok, but she's also, on Instagram. I tend to get on Twitter a lot. Instagram's owned by Facebook, and you can invest in Facebook. So things like that. Snapchat's another big one. I've been hearing a lot that a lot of the kids going through this have really gravitated more towards Snapchat and TikTok. So those are some tech ways you can get into investing, and I think those could be long-term plays. We've seen that people are definitely on social media. They're sharing this story of being impacted by COVID more during these times than I probably ever before. So those could be great investments. Talking to your friends, like what are they still buying no matter what? I think out of this, the COVID time frame into the summer months, alcohol, there could be a lot of brands that benefit from this because as we get out of the, really tight shelter in place, um, stay at home orders, we're heading right into the summer months when people want to get out. And now they're going to want to get out even more than before because we've been stuck inside and stuck at home. So those could be big plays. What are just other things? I'm just, reeling off a couple ideas here, but these are just the things I want you to start thinking about and want you to start kind of spinning your head around, looking around. For me, the summer months, it's not like I have a stringent strategy behind this, but usually in the summer months, I always remind myself to take another look at Apple. And that is purely because their worldwide developer conference is coming up. If they have big news, they're most likely going to see a stock bump, but it's also one of those companies that I believe in long term. They launched their new iPhones in the fall, so like getting in the summer when news is on everything but you buying your brand new iPhone. And on the flip side, I don't want to act like I know the answer to this. iPhone sales could be horrible this year if the COVID crisis continues because there's just not going to be as many people making enough money to buy $1,000 phone. So just things to think about. I'm literally looking around my room here at this office. Books. I don't know. Are people reading more these days? I don't know. But a paper company. The list goes on and on. But you can really think of things like that. And then what are the things that you're doing more now than you were before the pandemic? And if this continues, could that be something that, continues into our, lives therein? For me, I like to think of, we're all stuck at home. I think we're buying more things online. So things like Visa, MasterCard, PayPal, I think those potentially are just, people are using that stuff more and more. They want to be touchless. They want to not, necessarily carry cash as much and be handing cash back and forth in these environments. I think streaming, right? Like streaming services could be huge. And I think they will continue to be huge. But as people, probably out of this, I would assume places like movie theaters are going to take a beating, right? Like, I don't think people are probably going to want to go sit in a dirty movie theater closer to people if they can stay at home and stream this stuff from their couch. And then the big one, and if you listen to the Corey Gregory episode a few episodes back, he used a great saying that I'm going to reuse here. And he said, what are the things that, as he said, are on sale right now when this economy is back? And that's where a lot of my mindset's been. And on this podcast, that's probably where you've heard me talk the most. And that's looking at things that when things are back, even if it's a new normal and we're not in the exact same space that we were before all of this happened, what are the avenues that, are going to be booming again? I'm pretty confident in oil. I think, if the airlines take a beating, yes, that's one thing. I also think airlines are a great thing to get into right now, just because I think people will go back to traveling, whatever that new normal is. I think they're so cheap. So that this is where, like, even if things don't go back to normal, even if like airlines don't go 100% back to normal, I'm under the opinion that they're going to be better than they are right now. So like the prices today are so cheap, they're on sale. They might not go back to where they were. I'm not saying that. I honestly probably doubt that to some degree, at least for the long haul. But you could get in on some deals, some sales today, and so start thinking about that, whether that's oil companies, airlines, automotive. Some of those you could just start putting some money in and treat that part of your portfolio similar to what me and Corey talked about with dividends. You want to just put that money in there and let it ride. Let it grow, and really keep the strategy that stuff should sit there untouched for years. If you're someone young in your 20s and you're listening to this, and you start putting money towards those things, those types of stocks now, and you let that sit for a decade, we can come back and talk in 2030, and I guarantee that you will, and I don't want to say guarantee, I probably shouldn't say guarantee. So I would highly, highly bet that you will have a great return by then. So there's lots of ways to think through this. As you guys know, and I talk about it every episode, but there's a link in the show notes for the rebound tracker. I think I was going to call it rename it COVID tracker. I think it makes a little more sense, and it could be timely looking back. But like I said, over the next week, I'm reevaluating my investment strategies. I think we're at a point where it's safe to do so and really recalibrate the way I'm diversifying my and my wife's portfolio. So take a look at that. There's going to be a ton of companies on there now that I'm interested in, and we can talk through more. If you have questions, please take a look at that. Message me on any of the socials. You can email me, any of those things, and we can have some dialogue about those. But I hope some of that was helpful. Just a different way to think about what you should be investing in or what you could be investing in. Some of those things I talked about, like, what's your wife do? What's your husband, buy? What are people looking at? Like, those are probably things a lot of you have already thought of, but I thought it'd be a great reminder just to take another step back. I think we're all caught up in this craziness still, and like we're all kind of sick and tired of being at home. But what I want to remind everybody is that this is going to be a great buying opportunity. It still is, even if the markets have come back quite a bit from their lows. We don't know what the road ahead is. So just keep plugging along. As Warren Buffett said, time in the market is more important than timing the market. So keep that in mind. All right, everybody. Thank you again for listening to another episode of Simply Finance. I'm Shane White. I hope today added some value. I really appreciate you taking the time to listen, and we will be back with another episode soon. So have a great Wednesday, folks. I'll talk to you soon.